Thor Industries was motoring along, but this year, tariff threats loom, and the stock has hit the brakes. Driven by millennials, will enough Americans take to the summer highways to put Thor back in gear?
Okay, what do you do when a high-flying momentum stock loses its mojo and comes crashing down to earth? That's a big question we need to address when it comes to Thor Industries, THO, the world's #1 maker of motorhomes and recreational vehicles. After a stunning multi-year, okay, not quarter, but multi-year rally, Thor hit a wall earlier this year. Stock is down 39% from its highs. It's been brutal. For a long time, investors believed that RVs were on fire because millennials love the darn things. Remember glamping, glamour camping? But then everyone started worrying about ballooning inventories and sky-high labor costs and rising raw costs, and gasoline became more expensive. Fast forward to last week when Thor reported an okay, not perfect quarter, but a good quarter, with modest top-line beat and modest earnings miss. But while raw costs are still an issue, Thor says it expects the RV business to remain strong here. Since then, the stock has bounced a bit, but it's still way off its highs. So has Thor been punished enough? This is a stock that's selling for less than 10 times next year's earnings estimates, despite having a 17% long-term growth rate. It's either insanely cheap or the estimates are too high. That's why we need to speak with Bob Martin. He's the president and CEO of Thor Industries to get a better read on how his company's doing, where it's headed. Mr. Martin, welcome back to Mad Money. Good to see you, Bob. Have a seat. Thank you. All right, so, Bob, since we've seen you, I mean, obviously, it was kind of a difficult thing because you told us that employment costs had gone up because you were in the hottest, what used to be the coldest and the hottest employment market. And then we got these tariffs, which initially you felt might not hurt you, but it looks like they have. How much of these negatives are now in the rearview mirror?
You know, the unemployment, the employment rate has subsided quite a bit in Indiana, and then we're also expanding in Ohio, Idaho, where it's a little bit easier for us. Tariffs, when I was here last, the actual announcement was while I was in your green room last March.
You told us you didn't think it would be an issue.
Well, we thought it would be minimal. And even that today, they're still kind of all over the board, and we're just finding ways to kind of counteract them whenever we can. I mean, for us, you know, taking some raw costs out, decontenting units, we still don't know exactly where they're going, but we're a very reactive company, and our guys are great at you know, looking at content of product and looking at suppliers. So we're still very optimistic that we can keep it to a minimal effect.
Now, dealer inventories were up 30%, but you said that was appropriate. I'm trying to figure out how appropriate that really is.
Yeah, they're higher, but when we say appropriate, one thing we really look at is the aging of the inventory, and aging has been down the last 2 quarters. So dealers ordered a lot in the fall. They knew that they wanted to, you know, have stock for spring shows, open houses, and things such as that. I know not everybody loves to hear weather, but for us, it has been a factor. And when you have snow, you know, March, April, May, when I was here last, you had your 3rd nor'easter, and I think you had a 4th. So these are factors for our industry. And right since then, since March, or May actually, in June, we've picked up. Retail has picked up. So we're getting a very good vibe from the dealers on a lot of the product. Now, we've got to work through that. So overall, we still feel great about the fundamentals and the long term of the industry. We just need to work through some of the inventory. It is a little bit elevated, and the dealers work through that.
Now, I know Marcus Lemonis was on here. I probably watched him for Camping World, and he said things have really gotten very much back on track. Of course, he like others, he did cite the weather somewhat, but recognized that things had gotten a little bit weak. What I'm trying to figure out is how much of it might be cyclicality. Gasoline did go up. There is a notion that it's costing a little more to go buy or rent a Thor vehicle.
Yeah, for our industry, gas usually isn't a big indicator.
Okay.
Many times people think that it is.
Right.
But actually, people just take shorter trips. And our dealers are very well versed in, they'll throw in a gas card or something like that if that's someone's objection. So that really hasn't been, you know, much of a drag. For us, I think if we didn't have the spring that we had this year, we'd have a very different conversation right now.
I have to tell you, when I've seen this kind of thing happen, where a stock's got a pretty good price to earnings multiple and then gets cut to literally in half of the average stock, it makes me think, is there something big has changed? Did everyone just go crazy and think that, you know what, this is good, this is a boom? And like the housing problem in 2007, we made too many houses. I mean, could it be like that?
We don't feel so. I mean, that's where literally we build to order. So it's not that we made dealers take too much inventory. They bought what they thought was appropriate. And when we talk to banks, we can see that their floor plan limit is appropriate. It's not too high. When I go back to the housing bubble, it hit RVs as well, and I lived through that. It was painful, but the biggest thing that you looked at was credit. Right now, credit is flowing very freely.
Okay.
We all know, and we've known that rates would go up, but for us, a quarter at a time is not really a big issue. Changes payment a little bit, but it's not a big drag either.
Okay, I just want to go back to the tariffs. You're right. We are experiencing inflationary price increases in certain raw material and commodity-based components, due in large part to the headwinds created by the announcements and implementation of the steel and aluminum tariffs. I mean, there's really no real way to get around it. I mean, that was part of the president's plan, was to make it so it costs more. I mean, there's nothing you can really do other than eat it.
Well, a little bit. There are ways you can decontent. You can look at each.
Decontent meaning
taking different products out of units. You know, over years, sometimes we do get price creep, and we're adding maybe too many features. And so we do this not just because of tariffs. We look at our product all the time, and we've taken one of our top products that just crept up too much, and you can totally change the price point just by looking at what you put into it. So we have projects going on at all of our companies. Is there going to be some effect? Sure. But we're really trying to minimize it. And, over time, I think we can really manage it pretty well.
One last question. You do not do a traditional conference call. If I had been on that call, I would have said, Bob, is there any improvement in the last month since the since the quarter was closed? You would say, yes, there has been.
In the overall market?
Yes.
Yes. As soon as the weather broke, dealers are now busy. They have great lot traffic. We had great shows before, but when you have a lot of snow, people can't deliver the units. So once it broke in May, it instantly got much busier. Do we make it up? For us, we don't manage to the quarter. We manage for the long haul. We feel great about the demographics, the fundamentals. We think people are going to continue to camp for many years, and we have some great opportunities that we're investing more in our marketing efforts, trying to reach those younger buyers, because if you can just get 1% more of the population and really go down to that younger buyer, that's a huge number. It's a great opportunity for us.
All right, let's leave it at that. Thank you so much, Bob Martin, President and CEO of Thor Industries, THO. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.